You wake up. You grab your phone. Before your feet even hit the floor, you open Twitter or a news app or YouTube. And the headlines are terrifying. There is a conflict escalating, a war breaking out. Supply chains are breaking down. A major global crisis is happening right now, in real time. You scroll through the videos. You read the panic in the comments. Your brain does what human brains are wired to do. It applies basic, everyday logic. You think to yourself, this is a disaster. The world is in chaos. The economy is going to take a massive hit. The market is going to bleed today, you tell yourself. It has to. It's the only logical outcome. You sit down at your desk. You pull up the chart of the S&P 500 or the NASDAQ. You wait for the opening bell. You don't even look for your normal technical setup. You don't care about support or resistance levels today. Because today, you have a secret weapon. You have the news. You know something about the real world, and you are going to use it to make money. The market opens. For the first few minutes, it does exactly what you expected. It drops. Red candles start printing. People are panicking. You smile, you click the sell button. You enter a short position, betting against the market. You put your stop loss a little higher up, but you aren't worried about it. This is a guaranteed win. The news is just too bad for the market to go up. You sit back and wait to get paid. But then, something strange happens. The market stops dropping. It just stalls. Okay, you think. Just a minor pause. People are just catching their breath before the real dump. But the drop doesn't continue. Instead, a green candle prints. Then another. They aren't small candles either. They are aggressive. They are fast. Within 2 minutes, the price has completely erased the morning drop. It is moving up so violently that it feels like the chart is broken. You stare at the screen in total confusion. What are they doing? You say out loud. Did they not read the news? Are these people blind? There is a literal war starting. The price keeps climbing. It crosses your entry point. You are now losing money, but you refuse to close the trade. Why? Because you are using logic, and logically, a global crisis means the stock market should go down. You convince yourself that the market is just faking everyone out, and the real crash is going to happen any second. So, you hold the losing trade. You wait for logic to kick in, and the market responds by printing the biggest, fastest green candle of the day. It sweeps straight through your stop loss. It takes your money. And then, it just keeps going higher. You are out of the trade. Your account is in the red, and you are furious. You feel cheated. You feel like the entire system is a scam. You were right about the news. You were right about the global situation. So, why did you just lose your money? This is the exact moment that breaks most beginners. When you lose a trade because of a bad technical entry, it hurts, but you can understand it. But when you lose a trade because the market did the exact opposite of what made sense in the real world, it breaks your brain. You start thinking the market is rigged. You think there is a guy behind a curtain specifically pressing buttons to steal your money. But the market isn't rigged against you. You just don't understand what the market actually is. You see, human beings use logic to navigate the world. If it rains, the ground gets wet. If the news is bad, the stock market should go down. But the stock market is not a reflection of the daily news. The stock market is not a measure of how happy or peaceful the world is today. The stock market is simply a mechanism for transferring money. It is a place where buyers meet sellers. That's it. And the big players, the massive banks, the hedge funds, the institutional algorithms, they don't trade based on emotions. They don't watch the news and get scared. They only care about one thing: liquidity. Let me explain liquidity in the simplest way possible. Imagine you are a giant institution. You have billions of dollars, and you want to buy a massive amount of the S&P 500. If you just go into the market and hit the buy button for $1 billion, the price will instantly skyrocket. You will end up paying terrible, expensive prices for your shares. If you want to buy a massive amount of shares at a cheap price, you need a massive amount of people willing to sell them to you at a cheap price. Now ask yourself, how do you get millions of normal, everyday people to suddenly panic and sell their shares at the exact same time? You need a scary headline. Now ask yourself, how do you get millions of normal, everyday people to suddenly panic and sell their shares at the exact same time? You need a scary headline. When terrible news breaks, retail traders completely panic. They read the headlines, they apply their basic human logic, and they rush to their computers to hit the sell button. They dump their investments, or they open short positions betting the market will crash. And the massive institutions are sitting right there at the bottom, waiting. They see millions of panicked retail traders trying to sell, and they gladly buy every single share from them. They absorb all that selling pressure like a giant sponge. This is why the market stalls. This is why the drop stops. And once the big institutions have bought everything they need, there is no one left to sell. Everyone who is going to panic has already panicked. So what happens next? The price goes up. It goes up violently. And as it goes up, all those retail traders who placed short bets, like you did, suddenly start losing money. When a short seller loses money and wants to exit the trade, what do they have to do? They have to buy. So now the price is being pushed up by the institutions, and it is being pushed up even faster by all the panicked retail traders who are forced to buy back their losing trades. This is called a short squeeze, and it is the reason why the market violently explodes upward on the exact days that the news tells you it should crash. The market didn't ignore the news. The market used the news to trick you into handing over your money to the big players. Your human logic was the exact trap they used to catch you. Why do we fall for this over and over again? Because of our ego. We all want to feel smart. We want to read a complicated geopolitical article, connect the dots, and predict what will happen next. We want to be the brilliant analyst who saw the crash coming before anyone else. But the market does not care how smart you are. The market does not care if you read the Wall Street Journal. You have to accept a very humbling reality. By the time you read a breaking news headline on Twitter, the multi-billion-dollar hedge funds already knew about it hours, days, or even weeks ago. They have already made their moves. The news is already priced in. When the headline finally reaches you, the average person, the move is already over. The trap is already set. You are not the early bird catching the worm. You are the liquidity. So how do professionals trade during crazy news events? How do you survive when the world is in chaos? It's actually incredibly simple. You stop trying to predict the news, and you start trading the reaction. Professionals don't care if the news is good or bad. They only care about how the price moves after the news comes out. If a terrible, scary headline drops, and the market opens and immediately starts printing green candles and making higher highs, a professional trader does not fight it. A professional does not say, "This makes no sense. The market is wrong. I am going to short it." A professional says, "The news is terrible, but the chart is going up. Therefore, buyers are in control. I am going to buy." They detach completely from the real world. They leave their opinions, their politics, and their human logic at the door. They look at the chart like a blank piece of paper. If the line goes up, they look for reasons to buy. If the line goes down, they look for reasons to sell. It does not matter what the news anchor on the TV is yelling about. The chart is the only truth. Trading is a game of visual information. The biggest mistake you can make is trying to mix fundamental global news with day trading. If you're investing for 10 years, the news matters. If you're trying to catch a 20-point move on the NASDAQ in the next 5 minutes, the news is a distraction that will only get you killed. The next time a massive news event happens, the next time everyone on the internet is screaming that the market is going to crash, do an experiment. Turn off your phone. Close Twitter. Mute the TV. Just look at the candles. Look at the volume. Look at the structure. Notice how often the chart tells you exactly what is going to happen, while the headlines are telling you the exact opposite. You have to choose what you are going to trust. Are you going to trust the panic of the crowd? Or are you going to trust the footprint of the money on your screen? You cannot be a geopolitical analyst and a day trader at the exact same time. One uses human logic. The other uses pure math and probability. Choose to be a trader. Stop letting headlines trick you out of your capital. If you want to stop trading your opinions and start trading the actual market, hit the subscribe button. On this channel, we don't care about what the market should do. We only care about what it is doing and how we can execute our edge without letting our ego get in the way. Turn off the news. Trade the chart. I'll see you in the next one.